Planned inflation will turn into catastrophic hyperinflation. Prepare for unbearable cost of living. Hi, folks. Welcome to the Financial Argument. Inflation is like sin. Every government denounces it, and every government practices it. The author of this quote, Sir Frederick William Leith Ross, was a Scottish economist who was the chief advisor to the UK government from 1932 to 1945. He witnessed two of the most catastrophic experiences of hyperinflation in history. Hyperinflation in the Weimar Republic in 1923 and the Hungarian hyperinflation in 1946. Economic history is full of many devastating examples of hyperinflation like these. We see history repeating itself as governments continue to make the same mistakes. Although the reasons and triggers were different, the consequences and the pain it brought to people were always the same. With the planned inflation by our government, I believe the dark clouds I see on the horizon for the USA will soon spread to other world economies. Even worse, as I'll explain in this video, similar factors that caused the Weimar hyperinflation are occurring in the United States today. Moreover, there are so many direct and indirect causes present that can trigger hyperinflation that the situation looks very serious. I have reviewed the report provided by Bank of America's chief investment strategist, Michael Hartnett, and I share his views that inflation is facing us. More importantly, history shows us that the hyperinflation has a strong possibility of looking like the one in Weimar Germany in 1923. Let's look at the report. Michael Hartnett has been warning us that inflation is inevitable, and he believes the way this will unfold is the velocity of people will rise and the velocity of money will rise. With restrictions easing in 2021, Hartnett writes that human mobility will increase and macro data will speed up, especially in Q2, when investors should expect the US GDP to increase by 10%, EPS by 20%, and CPI by 3 to 4%. Inflation break-evens and lead indicators are skyrocketing. It's the perfect storm of more centralized governments, the dollar losing value, countries favoring economic nationalism, irresponsible spending, and the new policies toward reducing inequality. Bank of America reported that the U.S. has acquired a 17% GDP budget deficit, or $3.5 trillion, along with $13.3 trillion in global central bank liquidity. All of this in the past 12 months. Hartnett says that asset bubbles in the last 12 years have been contributing to historic wealth inequality. With the new vaccine, Bank of America expects a rising velocity of people this year to increase the velocity of money. They predict the inflation will lead to a pop in the bubble as small businesses pick up again. Bank of America references Germany after World War I and the similarities between what is happening now with the extreme inflation that occurred then. They mention, along with Reichsbank's monetization of debt, the most epic, extreme analog of surging velocity and inflation following end-of-war psychology, pin-up savings, lost confidence in currency and authorities. Hartnett predicts real assets such as real estate, commodities, and collectibles will do better than financial assets in the 2020s. He reminds us that since 1950, real assets have a 70% correlation with inflation compared to the 5% correlation with stocks and bonds. Apart from Bank of America, another person who thinks like me is Michael Burry. I have to mention that he changed his Twitter username to Cassandra, the cursed heroine of Greek mythology. Choosing the name Cassandra is significant because, according to the mythological curse, Cassandra would see the future but wouldn't get anyone to believe it. For those who are unfamiliar, the Triffin Dilemma, or Triffin Paradox, is the economic conflict of interest that arises between short-term local and long-term international goals for countries whose currencies serve as global reserve currencies, such as the US dollar. Michael Burry said to consider Triffin's dilemma as China's GDP surpasses that of the US, and our debt forces the dollar to lose value faster than others. He likened the global fiat system to the Flying Dutchman, tweeting that it must have a captain no matter how heartless the transition. His views on the Chinese economy are consistent with mine, and I believe he is correct. He continued his tweets by sharing quotes from a book. The chapters he cited described the events that took place as the hyperinflation in Weimar Germany unfolded. Germany's economic situation was apparently good prior to hyperinflation, and the German mark became one of the strongest currencies in the world for a time. Still, it could not prevent hyperinflation from rearing its ugly head. Cassandra Burry, in another tweet on February 20th, he stated that the American government is inviting inflation with its MMT-tinged policies. These policies cover projects financed only by printing money, such as the Green New Deal, which I told you about in my previous videos. He tweeted, "The U.S. government is inviting inflation with its MMT-tinged policies. Brisk debt/GDP, M2 increases while retail sales, PMI stage V recovery. Trillions more stimulus and reopening to boost demand as employee and supply chain costs skyrocket, #paradigm shift." He linked an article at the end of his tweet where he described how the current conditions of the American economy were similar to the economic conditions of Weimar Germany before hyperinflation. I started the video with the Bank of America report because Michael Burry announced his estimates based on this report 1 week after this report was published. I also think that he already had these thoughts, but the report confirmed it and played a part in his decision to tweet about it. The most important part of the report is where they share the pre- and post-hyperinflation data of Weimar Germany. When we look at Bank of America comparisons, the annual change in the money supply, budget deficit, velocity, inflation, and the output production difference are indicated in the columns. In 1914, Weimar Germany came out of the gold standard due to the war and began to print unlimited money. The budget deficit was not that high initially, but continued to grow terribly over time, while Germany continued to print money rapidly. Meanwhile, the velocity of money was continually falling because there was war. People did not shop and spend like usual. Despite Germany's defeat, people had a false sense of comfort after the war, and the circulation rate of money reached the horrible figure at the bottom, starting from 129%. Haven't we heard the same story from the central banks for years? We've been printing money since 2008, but nothing happens. This is precisely the same indifference that Germany experienced at the time. You can print trillions of dollars in money, the velocity of money might drop, but suddenly the velocity increases at alarming rates. At that point, hyperinflation will occur even in a country like Germany. Of course, when we look at the chart, it seems that inflation rates were high enough in Germany even then. We see that although inflation rates were 2% for a time, it was possible to see figures like 30% and 34%. Although the inflation rates are calculated deceitfully today, the situation in Germany that day is not similar to the US situation today. So it's difficult to say with certainty that America will follow in the footsteps of the terrible situation in 1923. However, it's also incorrect to say that hyperinflation is out of the question for America. There will undoubtedly be high inflation in America. As I've been saying for years, and like many of you know, I foresee a global currency change soon. I believe one of the events that will trigger this will be hyperinflation in the UK, Australia, Canada, and especially the United States of America. It's easy to say that all world economies will face hyperinflation after seeing the madness overcoming central banks who print increasing amounts of money. The Bank of Japan increased 130%. The Fed increased from 20 to 30%. ECB rose to 60%. Here again, PBOC, the People's Bank of China, draws attention. Even if they print money, their increased production capacity offsets it, so their figures gradually decrease. This will be a huge advantage for China as the whole world experiences hyperinflation. If we look at the quantities of money printed until now, we see that the situation is indeed dire. Japan is approaching $7 trillion. The United States has exceeded $7.5 trillion and is approaching $8 trillion. Europe, on the other hand, exceeded $8.5 trillion. As long as this printing of money continues, the possibility of hyperinflation everywhere, including the US, becomes more of a reality. What I want you to take even more seriously is that central banks crossed the line where they should have stopped a long time ago. They have to print more money for the system to continue. They have to, and will continue to do so. So how do we protect ourselves and our loved ones from the high inflation heading towards us and possible hyperinflation? Limited assets that do not rely on any central authority other than God. Physical silver in one hand, physical gold in the other hand, and perhaps some Bitcoin in your front pockets. We'll see you in the next video. God bless you all.